Being the first day of the month, the latest house price data for the previous month is released, and it shows that home prices have continued to fall in Sydney and Melbourne, and that Canberra also saw its first drop in around 3 years. But in Adelaide, Brisbane, Perth and Darwin, and especially in regional areas, prices have continued to rise despite the first rise in mortgage rates in almost 12 years. So let's bring in here one of Australia's leading housing researchers, Louis Christopher from SQM Research. Louis, always good to have a chat to you about these things. I just want to go to this whole beginning, and that is interest rates rise. Generally, when rates rise, the price of assets fall, including housing. We're seeing a glimpse of it now, but is this only just the start?
Ross, I do believe that overall this is just a start. It's very likely, as your audience is aware, that we'll see another rate rise again shortly. And generally speaking, when you see rising interest rates and housing prices, they do not mix well, and housing prices tend to start to fall. There is one caveat in all this, and that is the reason why we're seeing interest rate rises, and that is because inflation is picking up. And what we've found in the past is that there is a strong relationship between rising inflation and rising housing prices. So in all this, yes, most likely housing prices have got further to fall, but if inflation runs well ahead of what the Reserve Bank of Australia expects and they fall behind the curve, it's very possible the housing market could bottom out and start to pick up again as investors chase real assets.
And that's fairly similar to what took place in the 1970s. So for people who have got to understand this, they've got to have pretty long memories.
Absolutely. When we go back to the 1970s, people are not aware, but Sydney house prices actually quadrupled in that decade, which is just crazy. And that's on nominal terms, not necessarily on real terms. But such was the chase for real assets at the time to get some type of protection against inflation that property prices went up, not just here in Australia, but worldwide.
OK, so then come back to another issue with inflation, and that is the cost of housing materials. Now, we know the price of building is rising exponentially. We know that there are construction companies going out of business as a result of that. What I think is that if it becomes too expensive to build, then the price of established houses might also get a bit of a floor under them, mainly because people are going to turn away from new builds and turn back to existing dwellings.
You're spot on there, Ross. One caveat to that, though, is that what we've found in the past with our research is that in a falling housing market, there's a bit of a disconnect between new costs built as well as established housing. We saw that in the United States during the global financial crisis, where housing prices fell well below the cost to build a home. So it just depends on the strength of the market. But generally, once you see a rise in the market, then you see all those additional costs start to be factored into the price of established housing.
OK, but then one other aspect comes into it. Australia needs an ongoing stock of housing to accommodate people who need rental accommodation. And certainly if Australia's immigration picks up again, as is expected, then you're going to need even more housing again. So what's the state of the rental accommodation market like right now?
Well, Ross, right now we've got a rental crisis across the country. Rental vacancy rates are running at just 1.1%, and rents have risen in the past 12 months on our numbers by 15%. That's well and truly above the inflation rate, as we'd be well aware. That eats, of course, into disposable income. But I just don't see any immediate relief on that front right now. There is a chance that down the track we'll see more people sharing a home together, and that may well start to see a bit of a lift in the stock of rental accommodation, maybe. But of course we need to factor in a most likely rise in immigration, potentially at 300,000 people a year. That's going to absorb a lot of any additional rental stock out there. So it's really hard right now to see any relief on the rental horizon, and it's very likely rents are going to continue to rise from here right across the country.
So what I'm saying here, and what the picture I'm trying to build is, yes, there is, with rising interest rates, pressure for home prices to fall, but with the cost of new builds, with the demand for rental accommodation, there's actually a couple of sort of, if you like, scenarios out there where there could be floors placed under the housing market. And indeed, as you point out, with inflation rising, there could even be an argument for house prices in the future to rise as a result of the shortage of building and that rise in inflation.
I would agree with that. Much depends on what the Reserve Bank of Australia does, Ross. If they're too aggressive in lifting interest rates, and it's still very likely we'll get a hard landing in the housing market. On the other hand, if for a moment they remain behind the curve compared to inflation, I think we'll see a bottom in the housing market sooner than expected, and then housing prices will take off in Sydney and Melbourne, in nominal terms at least. And as you pointed out up front, we're still seeing rising housing prices in Brisbane, in Adelaide, in Perth, and other regional townships.
I'll tell you what, Louis Christopher, always great to have you in the program and to get your input into all of this from SQM Research. Louis Christopher, many thanks for your time.
Nice to be with you.